Thanks, Lisa, and always good to be joined by Mr. Pickens. So the Nat Gas Act, it is back on Congress's agenda.
It's back.
What are the prospects?
It was filed April 6th, and we have almost 200 co-sponsors.
So what does that mean?
Well,
how will that help?
The beautiful part of the co-sponsors, they're 50-50 Democrats and Republicans. So it's a nonpartisan issue. So I predict that it'll be voted on within 30 days, and you'll have over 300 votes for it. Then it'll go to the Senate. We'll have a little bit of a struggle there, but we'll get it out. The president likes it. He likes the bill.
I know he voiced some support for the plan to convert trucks to natural gas.
That's right.
Recently.
If we are successful on this, it'll take us 7 years to accomplish what I want to do, but we will replace the diesel in the 18-wheelers with natural gas, and that's 2.5 million barrels a day. So we'll cut OPEC in half.
No question natural gas is having a moment, not all of it positive. There have been concerns after the Chesapeake fluid spill about the environmental hazards of natural gas. There was also a study released last week that suggested that the environmental hazards of natural gas are as significant as those associated with coal. Is that dimming the prospects of moving forward with natural gas at all these environmental concerns?
Well, natural gas, I mean, no question you drill these horizontal wells and you fracture. You're looking at a guy that's fracked over 3,000 wells. So I've had a lot of experience with it. Never have I messed up a freshwater zone on a frack job.
But that doesn't mean it couldn't happen, obviously.
It could. It could happen, but it's remote. But you've had over 800,000 wells fracked in Oklahoma, Kansas, Texas, and now we're focused on eastern Pennsylvania. So that's where the problem is. But I think on investigation, you will find that the fracking is safe.
Now, yesterday we were joined by Ralph Eads, who's a deal maker in this space with Jefferies, and he actually thought there was a silver lining in all these environmental concerns being raised now, in that it could encourage the industry to put safeguards, protections, best practices in place very early on in the process. Is that likely?
Well, Ralph Eads knows about as much about it as anybody I know. I mean, he's a smart guy, has been in the business a long time, and you should let the states handle this. Don't turn it over to the federal authorities, the EPA. I think you're better off the states can manage it better. And I think the rules, regulations that are in place, but they may have to add some things. But I like a closed frac system, and to publish what you're putting down the hole, fine. Put it on there. Put it on your website. And some of the companies do that. Chesapeake does, I know, and some others.
One thing that hasn't changed about all of this is the cost associated with converting all these trucks into...
The cost?
The costs.
Well, you're not going to convert them. You're going to go to new vehicles, and this creates a lot of jobs.
But you still have to create filling stations. You have to work on a pipeline. I mean, there are costs associated with getting natural gas trucks on the road, whether you convert them or whether you start with the new trucks.
Okay, the natural gas is the most widely distributed resource in America. It's up every street and down every alley. So you've got the natural gas in place. Now you have to have the fueling but let the industry pay for that. Let them pay for it. The federal government shouldn't have anything to do with that.
Is there any sign that the industry is going to pay for that? Where is the capital-intensive process? Where is that capital coming from?
The capital will come from the industry. You have such a huge discrepancy in the price of the fuel. 1 MCF of natural gas costs $4. It will do the same work, the same job as 7 gallons of diesel, which costs $30. So there's such a huge gap. It gives an opportunity to finance, make money off of it, keep it at home, use our own resource, and get off of OPEC oil.
All right. So who are the key players in this space who are doing this right now and paving? Who are the key players right now? Well,
you've got the truckers are very interested in it. I've met with them. They say don't make them pay to be patriotic. They are patriotic. They're like Marines. And so they want a fair break on the deal, and I think it all moves in their direction, and you do go to natural gas and replace OPEC oil.
So I'm going to pause for a second because I have a feeling Lisa back in New York wants to toss in a question for you. Lisa?
Thanks so much, Willow. You know, we've gotten a lot of questions actually from our audience, and I wanted to ask you this one. I'm sure you have an opinion. Where do you think oil prices are likely to go? Of course, we've seen oil actually fall since the news that bin Laden was killed. Do you think that's a short-term reaction? Are we likely to see oil prices climb higher once again?
Oil prices are going to go up, I think. And if you look at the fourth quarter projection for oil, it's 90 million barrels a day. That's globally. I don't think the industry, the total world, can produce much more than 88 million barrels a day. So 88 won't cover 90. Consequently, you have to kill demand with price, meaning oil prices go up.
All right. Unfortunately, we have to leave it there. Boone, Willow, thank you very much. Mr. Pickens, great to have you on as a guest. Always appreciate your insight. All right. That was special correspondent Willow Bay once again at the Milken Institute Global Conference in LA with Boone Pickens, the CEO of BP Capital.